Disclaimer. This video is for entertainment and educational purposes. It is not a suggestion to buy, sell, or hold any asset. Please do your own research and due diligence when choosing what to invest in. Now, on to the analysis.
Hello, everyone. Welcome to today's episode. I hope everyone is having a great weekend. The stock market is closed today due to a holiday, so it is a 3-day weekend. And so as a result, we're not going to be able to do any selling today. However, I did want to talk about a potential stock that we can start using the wheel strategy with. If you remember on my last video, I did talk about wanting to diversify my portfolio. And so today we're going to talk about this company, Blackberry. Now, if many of you were around back when this company started, we know that this was mainly a smartphone company. That is how it got off the ground. And it was a very good smartphone company. It did pioneer a lot uh, of the software and hardware that made smartphone companies available to people. However, Apple, Samsung, and Motorola, and many other companies have actually taken over that market. And so as a result, BlackBerry has had to pivot, right? They had to pivot from strictly being a smartphone company. And currently, they are not really in the smartphone business anymore. So what did they pivot into? Well, today we can see that they are, according to this, what it is about, it says that they are in the cybersecurity, Internet of Things, which is AI, and their licensing also is a source of revenue for them. So as we can see, they are a well-established brand. People know them, and so that is a good thing, right? So today we're going to talk about what they have pivoted into, cybersecurity. We know that they have many contracts with the government, the U.S. Air Force, and other government deals like the Department of Homeland Security, even contracts with other countries as far as their cybersecurity is concerned. We know that they also have AI, the Internet of Things, also is something that they are getting revenue from. And so they are also in the automotive business with the autonomous vehicles, such as the Stellantis technology deals that they have. And of course, they are with many companies that make automobiles. And so this is another avenue that they have for revenue. Now, as also we can see on their latest earnings report, we can see that they are being profitable. Let's take a look at what their earnings report had them at last. Then the last quarter, we can see here that they actually did beat expectations. The expectations was estimated to be around the negative, right? And so they were expected to lose um, in earnings per share, but they actually did become profitable. And we can see that they are starting to become profitable again. They have beat the expectations in the past, as we can see here from this chart here. And so they are becoming profitable again. Okay. However, their guidance was not that great. And so their expectations are still low for the upcoming year. So this is a company that has a good balance sheet. Okay. They have up to $1 billion in assets right now. When compared to their debt, their current debt is around half of that. So they can easily liquidate all of their assets and be able to cover all of their debt at the current moment, which means that they have a pretty solid balance sheet. Okay. So this company will be around for the foreseeable future. We don't have to worry about it going bankrupt anytime soon. All right. Now, what are some other highlights of this company? Well, they are in the medical field with robotics, in the robotics industry as well. So we can see that they are branching out to different avenues, different fields where they can continue to make more revenue. Even though there's a lot of competition in these areas, we can see that there is hope for this company to continue to break out in the future. Okay. They do have collaborations with AMD and NVIDIA as well as Amazon. So they have deals going on with these companies. So really a lot of positive things that we can say about this company. Okay. Now, if we could take a look at their past year, we can see here during the 52 weeks, their low has been to $2.46, and their high was at $5.75. Okay. So it is somewhat a cyclical company. They do have around 588 million shares outstanding. It is a $1.71 billion company, and they can bring in around $100 million in revenue each quarter. Okay, so they do have a good, strong balance sheet, as we mentioned earlier. So definitely a company that we can start using the wheel strategy with. So let's take a look at some of the options here that we can start to sell. First, we're going to start the wheel, of course, selling a put option. It is currently trading at, I don't know what's going on here. Okay, it is currently trading on at $2.89, right? So let's say we wanted to own 100 shares of Blackberry. And let's say we wanted to buy it at $3 per share, because I think $3 is a pretty fair price for Blackberry right now at the moment. Okay, so if we wanted to sell a $3 put, which is a good idea to sell a $3 put to begin the wheel strategy with BlackBerry, because this will ensure that we would be able to buy these shares at a discount. Okay, we could try to sell the $2.50 put, even though nobody's buying that right now. We could go out further out into the year to try to sell this $2.50 put, but it will be much less likely that we will end up being assigned the shares at the expiration of this contract. So we really want to focus on this $3 put contract right now. So let's go out into next week and see how much this contract is selling for. So as we can see here on the week expiring June 7th, this $3 put option is selling for $22, okay, for 22 cents per share. So which means we would have to put into our broker's account $300, right? $3 per share for 100 shares, $300 as collateral in order to buy 100 shares of BlackBerry for $3 a share, okay? And we will be getting paid, once we sell this put option, we'll be getting paid 22 cents a share or $22 per contract, okay? So this means that essentially we would be buying each share of BlackBerry at $2.78. Okay, so that is definitely a discount to what it's currently trading at, $2.89. So this would be a good put option to sell on BlackBerry to start the wheel off. Okay, now once we do have or own the shares of BlackBerry, okay, remember we're operating under the assumption that we are going to own the 100 shares of BlackBerry. To finish off the wheel or to close the cycle, we want to start to sell, look at what calls we can sell, okay? Now let's take a look at a call that we could sell today or expiring on the same week as the put option. That would be going for 10 cents or $10 per contract, right? For the 100 shares. So that means that we would be making a total of $32 for our $300 investment. $32, right? For our $300 investment. $10 plus the $22 is $32. So that is just a little bit more than 10% of our return on our investment. Okay. So that's good. That would be a good, interest that we would get on our $300 investment. So that's not a bad deal. Now, if we go further out, right, let's say we wanted to also make a little bit of a capital gains on our 100 shares that we purchased from BlackBerry, okay, by selling the put option. Let's go a little bit further out to close to their next earnings call, okay? We see here we can sell a $3.50 call for $13, right? So that's not bad either. We could even go further and sell the $4 call option for close to $10, right? So that wouldn't be bad either. If we can go a little bit further out, if we really wanted to make a capital gain and go further out into July, or let's say even, let's take a look. See, even in July, we can see that we can sell the $4.50 call option for $5. So that's not a bad profit to make from these BlackBerry shares, right? And going out a little bit further out, even more, we can see that we can even sell the $5 call option for $10. Okay. And that means that if we bought the 100 shares of BlackBerry for $3 and we're attempting to sell it for $5, that's a $200 capital gains right there on top of the $32 that we would be making selling these contracts. Okay. So definitely a good profit that we can make by using the wheel strategy with BlackBerry. All right, so this is not a bad company to start using the wheel strategy with. However, if we remember on my previous video, I did mention that it's quite difficult to start diversifying my portfolio, seeing that the company that I am currently invested in, Bitfarms, right? If we take a look at Bitfarms, they're giving me even better premiums on their put options right now, okay? So if we take a look here, put options, you can see I only have to invest $200 and I would be making $25, right? On options that are selling for the month of June, right? And if we go out even further than that to, let's say, for example, if we go out even further out to, let's say, July, for instance, right? As we can see in July, I could be making $40 on these $200 that I invest in this company, okay? If we go even further out to August, it's only another $10 difference. So I would be looking to possibly go into July and sell these $2 put options and make $40 in return for my $200 investment. So that's a nice 20% return on my investment. So that is why it is so difficult to diversify my portfolio, because I have this company, this great company like Bitfarms, that is giving me a better premium for my investment. Okay, as we can see, I can make 40 cents for every $2 that I invest into this company. So that is the reason why I have not yet started using the wheel strategy with Blackberry. However, once Bitfarms does start to go up to $3, $3.50, or even $4, definitely will be too much for me to continue to sell put options in this great company, Bitfarms. All right, so then that is when I will pivot and go into a company like Blackberry. All right, so that is the video for today. Let me know in the comments below if you do have any questions. I am going to put a window of my first video of Bitfarms, which will let you know why I think this company is such a great company to start using the wheel strategy with. Okay, so if you want to look back to my first video that I made on Bitfarms, I'm going to leave that link on the window at the end of the video. Okay, so that's it for today, ladies and gentlemen. I hope that you are having a great weekend. Let me know. As you can see from my buying power before I close the video, let's take a look at my buying power. All right, as you can see, I do have $632 in my buying power, and this is because I did get back the $400 collateral from my two previous put options that expired worthless. So I already have, to start this week, I already have $400 that I can use as collateral to sell two put options. And so that is what I'm planning to do. Let's take a look at the history here real quick, see if it is mentioned here. I did have, as you can see here, $2 put options that expired last week. And so I got $400 back from collateral there. I'm going to be using those $400 as collateral to sell two more put options and possibly make 20% return on top of the, I believe it was 12% that I already made on those $400. Okay, so that would be a total of over 30% already on the $400 that I've invested into this company, Bitfarms. Okay, so yeah, if you would like to know more about those put options that I sold, you can take a look at my previous videos as well. Once again, I hope everybody is having a good weekend, and as always,
This has been another video from Dad's Market Stats. Thanks for watching. Don't forget to subscribe, comment, and like the video. If you know someone that can benefit from these videos, make sure to share it with them as well. Until next time, and remember, let's grow together.